seeing you've got the floor there, Mandy, according to Zoom, I'll let you kick off. Just for the few people that are on this call that aren't debtor finance experts, can you tell us a little bit about what invoice finance or debtor finance is, just to provide a little bit of scope? Now, before you answer, there's a few people that are on this call that know that I'm not big on plugs. This is meant to be an informative session only. There's a lot of people that are on this call with different backgrounds, but what I will do at some stage at the end of this or towards the middle of this session is I will call out the different types of debtor and invoice finance that each of our supporters and panelists look after today. And the reason I'm going to do that is simply because there is a big variety of the types of debtor finance that each panelist assists with, and there is quite a lot of differences in there. So I'll kick off with you, Mandy. Tell me, and tell those people that are part of this today. Tell us a little bit more about what you see as invoice and debtor finance.
I guess invoice finance at its core, it's a revolving line of credit, and it's based on the value of invoices. So say, for example, in an ordinary scenario, you would issue an invoice and you'd wait 30, 60 days, depending on your terms, for that invoice to be paid. Debtor finance is a mechanism whereby you get paid in advance, say, for example, 80% portion of the invoice value, and you're able to have that money almost immediately whilst waiting for your debtor to pay. It's a process of funding that's based on matching invoices with proof of deliveries and receipts. But certain, like our line of credit doesn't really require that, and it's based on the entire book.
Okay. And Brendan, while you're there, why do you think that businesses haven't really run with this versus a traditional bank line of credit?
Probably because I haven't done a good enough job selling it, Chris. I've been doing it for 30 years, so maybe I'm to blame. But look, I think Australia is quite unusual in that Australian businesses, more than any other, traditionally, and particularly 20 years ago and more, and less so today, were very happy to use their property as security. And when we were at banks in years gone by, we encouraged clients to build up property, not always to their benefit, I might add, probably to our benefit as bankers. And whereas in the last 10 years, there's been a much more educated focus on how you run your balance sheet, running it a bit leaner and meaner. And that means really using those receivables. It's a great asset, so why not use it?
And yeah, spot on. And I suppose, Amanda, what are some of the areas that you think that debtor finance might have changed post-COVID?
I think it's becoming a lot more technology driven. So you see a lot of lenders now opening up technology to leverage it. So, traditionally it used to be quite a bit of administration involved in running a facility, raising invoices and uploading them and manual allocations and those sorts of things. And I think the more that we move to this virtual world, the more that debtor finance needs to sort of keep up with that. And I think you'll see more and more lenders will start opening technology to make it just easier and more accessible for businesses.
Yeah, look, spot on. I think that we've probably seen a greater focus on technology in all areas for lending, whether you're a mortgage broker or an asset finance broker or whatnot. I know everyone's going in that space, but I think there's some certain aspects of debtor finance that a lot of people really haven't uncovered. And potentially the reason for that is that other brokers have probably fallen away to other options of working capital. Now, John, I've got you on the line. I know you have a very strong opinion of the alternatives to debtor finance and potentially how they're perceived. What are your views on there specific to the more data-driven options like your your fintech style lenders in terms of compared to them and invoice finance?
Yeah, look, certainly the fintechs have their place in the market. However, I think they've overreached insofar as a solution. So there's a need for them. They do what they do well, but brokers, I suppose, because they are, and they've always marketed to be easier to deal with than debtor financiers, because they're new and fresh to the market, that brokers just automatically seem to gravitate towards them, even when it's not the best solution. But they just, ease of use and convenience, they tend to just gravitate towards them.
And John, this is a question that we'll cover off with the whole panel. I did mention earlier on that I needed to provide a bit of context for those listening. So Invoice Money is the business that you work for. And Invoice Money do different types of facilities, but one of the aspects that you guys are known for is providing finance against a single invoice. With that in mind, mate, what are some of the areas that we as a broker need to look at specific to comparing each type of fee and cost within a debtor facility? Because if you think about it, there's a lot of people on this call that might never have done any debtor finance at all. And the big thing is, well, okay, where do I start? How do I start? And what are the things that can go wrong? Now, there's plenty of aspects that you can cover off on there, but if we would just look at the fees, someone comes in, they've got a term sheet or some information about a facility. What are the things that we need to look out for as a broker regarding cost? And I'm going to cover off on all of our panel with this question.
Yeah, look, most people only compare money out the door, or potential money out the door, and headline rate. What brokers need to do is actually look at the need of how much the business needs to borrow. We just seem to be in this dynamic that the more you can lend, the better off the customer is, and that's not necessarily true. And out there, you might have customers that have a $3 million ledger, but they only actually need $250,000 or $500,000 to borrow to actually solve their cash flow issue. So when you're comparing our headline rate and what we're going to charge people, say compared to a bank, we're going to look a lot more expensive. But with the bank, when you put in the whole $3 million in terms of invoicing that's going to turn through that facility and multiply it out, and then the effective loan rate, like in terms of LVR and everything else, something that's 3 or 4 times more expensive headline-wise can end up being cheaper for the customer. So you've got to look at the total solution.
It's interesting, John, you say that, and I'll move on to Amanda. If you look at some of the different aspects for yourself, Amanda, obviously Cashflow Finance does a lot of different types of facilities. One of the things that you guys also look at, which you and I have looked at quite recently, is a full service style lend. And I think that's a lend type that a lot of people would once they understand things, they would realise, well, hang on, there is clients that fit that as well. There's a lot of different client types in debtor and invoice finance. I think that's part of the challenge that a lot of the brokers have in terms of, well, okay, there's so many different client types, so many different risks. Maybe you could explain a little bit more about, from your end, Amanda, how you guys perceive and see the different fees and aspects that a broker needs to look out for.
Yeah, so full service factoring has a little bit of a stigma behind it. So a lot of businesses will see it as a finance of last resort, and that's absolutely not the case. It maybe was, 10, 15 years ago, but certainly not in the current environment. The benefits to full service funding is obviously you're getting a lot more for your money than just cash. So typically where you've got businesses that are in startup phase, or businesses that maybe aren't very good at managing their payables and receivables, full service facility is probably a better option for them. So what you're getting in that solution is a full outsourced collections function. And in our cases, we're giving clients insurance as well. So the fee structure will probably be heavier on the administration side than some invoice discounting style products, or products where the lender's a little bit more hands off, but you're certainly getting a lot more for your money in that structure. being able to outsource your collections function.
I think the hard part there also, Amanda, is that, look, you kind of put it there that there's definitely a stigma attached to that style of lending. But and John was talking before as well. It's a fairly important point that there is a level of security that different lenders take from different areas. And obviously, if you're managing someone's ledger, you can probably take on a client with a little bit more risk with that in mind versus a lend which has no disclosure or is on a confidential basis. Brendan, with that in mind, mate, tell us about what we should be looking out for from your perspective with fees.
Look, I think, Chris, for me, this is a specialist area, and if it's an area that you've not played in a lot, I really can't emphasise the importance of trying to find an experienced contact at the firms who you know well and you place some trust in, you know, because it is a different type of facility, and you know, it's one that can go very well for clients, but also for some clients there can be some concerns, and it's really important that clients understand what their obligations are and what they need to do. So, for example, with the debtor finance facility, it's really important that once you settle the facility, you have all your customers paying into the nominated account, so that recycles those customer payments. And you do that as quickly as possible, because obviously if you're accepting the 80% advance from the lender and then banking the cash, the lender's not going to be very happy. And so understanding your obligations as a client is really important. And also having a really good chat, you know, getting it in writing, what the rates are. I would always ask your contact at that debtor financier to provide an email estimating his costs annually, so that you've got a record, so that there can be no misunderstanding of that. And also asking what can go wrong there. You know, for example, if I was to fall into arrears in my taxation, is that a problem? If I was to my trading performance of the business was to fall away, is that a problem? Now, depending which lender you're using, so generally the banks will have servicing criteria and things that you will need to be aware of, and much stronger covenants, albeit at a very low price. And then you'll find a lot of the non-bank providers most likely will be able to provide you with a lot more flexibility around those type of issues. But I think just knowing them, asking them, making sure that you're aware of, you're asking the right questions before you enter into the facility.
Mate, it's interesting, Brendan. Two sessions already, two different sessions bringing up something that I think most brokers would not have really known a lot about before, but certainly post-COVID, they're going to learn real quick, and that's covenants. So for those people that have joined the call, covenants are essentially the terms and conditions that come up on the review of your client's commercial facility. It is not just for debtor finance. It's not just for private lending, as we spoke about this morning. Covenants can come up and are very common in bank facilities. Certainly for certain industry types, if you've ever got a pub that's a client, you're going to have a covenant that needs to be looked at if they're banked. You've also got a lot of the larger facilities, even though there was a little bit of a push to change that, that had come down slightly. So thanks for bringing that up, Brendan. And I suppose the way in which this space is, there is certain differences in terms of, you know, whether a facility, different nuances to be aware of. This is a pretty good opportune moment to remind everyone that we have the chat function for a reason. Please drop us a line if there's anything you'd like to cover, or if you'd like me to cover separately, you can message privately. And today is about learning and getting something out of today. Please, if there's any questions that any attendee has, feel free to message during the chat, and I'll make sure that if we don't cover off on it, I promise you I'll give you an explanation why. like we did this morning, but appreciate there's a lot of people on the call. And last but certainly not least, Mandy. Now, Mandy, you obviously, with Trade Plus, you have a very different product, which is a little bit closer to a line of credit. In terms of your product and the way you guys see the world, how do you see, and what are the things that you believe brokers need to look at in terms of fees and charges?
Yeah, so everyone's summarized it quite well. I think in order to do a comparison, you've got to get as close as you can to the apples and apples scenario. And I've identified this like mainly 3 components. So what's important is what the rate is, obviously, and what it's based on. So you've got your facility fee based on the limit, potentially. You've got your purchase fees, or they're called admin fees or management fees, and that's based on the sales turnover. There may be a minimum fee there as well that you have to pay regardless of whether you sell invoices. So what we find with like purchase fees, and that's why we don't charge them, it somewhat is counterproductive in that it penalizes the customer for growing. You also sometimes have to pay for these invoices to be purchased, even if they're not funded by the provider. So what some clients try and do, which is not ideal for anyone, is keep a separate ledger of non-funded, and this activity is not desirable. So the other component is obviously the interest rate. That's based on how much you draw on the facility. So if you're able to dissect these 3 main components, some lenders may charge 2 out of 3, some may charge 3. We charge facility fee and interest rate. Then you're able to do a comparison. And I've actually prepared a tool. If anyone wants the little calculator, it's nothing too fancy, but it will help you compare between providers. I can send that to you.
And with that in mind, for all of our attendees and all of our panelists, if there's something you'd like to provide the group that are on this, you're more than welcome to do so. So happy to take you up on the offer, of course, Mandy, and for yourself, John and Brendan and Amanda, if there's something else you'd like to send the group in whatever way, please feel free to do so. I'm happy to facilitate that. And with that in mind, we've talked about costs and where that side of things are. Obviously, the one thing, and I called the elephant out in the room early on, each one of our panelists have very different product options available and different aspects to what they do. So with that in mind, for yourself, and the answer to this will be quite different, what are the industry groups or types of clients that would fit your business specifically better than most, Mandy?
So the type of clients are very similar to a normal invoice finance product in that we need our clients to invoice in arrears. So often the work has to be carried out. No pre-invoicing will be supported.
Sorry, just specific to industry groups. So what are the sort of industries that you would see that from a Trade Plus perspective, what are the sort of industry groups that you guys tend to see a lot of? So obviously, we're not looking at one-upping each other here. We're just looking at what are the industry groups that you guys have had some wins with?
Yeah. So IT seems to be popular at the moment. Also labour hire, and often those industries are intertwined and perfect for our cloud computing link scenario. Manufacturing is also popular, professional services, wholesale.
Okay. John, in terms of yourself, what are the sort of industry groups and areas that you guys seem to have some wins with?
We're probably running hot at the moment on transport, and transport within the 5 to 10 truck range.
Okay.
And we're finding that because of our level of service, they're not as sophisticated as generally, especially if you get down to the 5 or even 3 trucks. But they're running their trucks 24 hours a day, 7 days a week, so they're turning over some decent money, but don't tend to have the sophistication, and so they're enjoying our personalised service and not relying on the technology so much.
And probably, and obviously, I'll ask the whole panel this out of courtesy, but I'm assuming for both yourself and for Mandy, being proud Victorians. A special shout out to both of you. Are you guys looking after and taking on Victorian clients going forward?
Absolutely.
Yeah, John.
Yes, well, we're still open around the country, so. Yeah.
Great stuff. Excellent. Just thought it's worth calling out. Brendan, where have you guys been having some wins, mate?
Look, I mean, we play pretty well across a lot of different industries, and with goods and services. But I guess we also have a strong trade finance product. So I guess for our particular business, we probably have a slight bent towards importers, but transport and mining services also quite significant.
Okay. And Amanda, yourself?
Oh, it's pretty similar across the board. We've obviously got an asset finance business, so we see a lot of transport style businesses or businesses who are in the yellow space. So businesses doing wet and dry hire, or excavation style businesses that do it on do and charge style structures. And also a little bit like Brendan, we're seeing a lot of wholesale and distribution. So I'm probably seeing more wholesale and distribution at the moment than anything else, because it hasn't really been as affected by COVID as some other industries. So that's something that we're seeing quite a lot of at the moment.
Yeah, I concur. I'm certainly seeing a little bit of that myself in terms of what I'm seeing out there as a broker. And to that point, in terms of asset finance, probably an opportunity to mention that there is a session specifically about how debtor finance will help you write more asset finance tomorrow for those people that want to tune in. In terms of today and going through this, there's a lot of people that have spent time out of their businesses. What I'd really like from each of you is something around what are some of the areas, or how would I look to begin? And Amanda, I'll kick off with yourself. What would you suggest? I'm a broker. I haven't done any debtor finance. How do I find an opportunity, and what do I do next?
So it might be focusing on where your referrals are coming from. So I know for yourself, Chris, you play a lot with accountants and other businesses who refer to you, but it's probably starting to focus on some specific industries that are big users of invoice finance. It would be learning some of the trigger points. So there's quite a few triggers that you'd want to listen out for with existing clients around what they're trying to do with their businesses and what's holding them up from doing that. Some of the key questions, I would always ask the client is what are your goals for the next sort of 12 to 24 months? And if they're saying, it's growth, or it's to bring on more staff, or it's to improve supplier relationships, it's listening out for the key trigger questions and then asking them what's holding them up from doing that. And if cash flow is, continually coming up as a reason why they can't achieve the goals that they want to achieve, it's then focusing on, what assets do they have in the business that you could potentially leverage to help with their working capital. And if they've got if they supply services to other businesses and they supply it in arrears on payment terms of, say, 14 days up to 90 days, then there's a real good opportunity to look at invoice finance as an option. The one benefit that I would say, and this is probably across the board with all the lenders on this panel, is that invoice finance is one of those products that you don't expect a broker to necessarily specialise in. And the BDMs are incredibly hands-on. So it's really just about identifying that you have a client that might be suitable for invoice finance, and then reaching out to the lender who will work really closely with you to help you get that opportunity over the line.
Can't agree with that more. Every single one of the people on this panel have been very helpful to me in terms of the way I've certainly looked at working with clients on debtor finance. So I couldn't agree with you more, Amanda. So to echo that, certainly feel free to reach out to all of the BDMs on this panel post the event with any scenarios and whatnot. It's really an area that does require some additional assistance, not just because yourselves as BDMs know more of your particular product, but there is one thing you'll find as a broker, and one of the things that really endeared me to debtor finance and trade versus equipment finance and other areas, you'd be amazed at the legwork that BDMs and funders really do to work with your client. And when you think about it, it does make sense. it's working capital at the end of the day. So it needs to actually work for the business that's utilising it. So it's certainly an area that I've really enjoyed spending more time with clients in over the last few years, but certainly during COVID, it's been incredibly helpful for a lot of clients and a lot of lenders to get more comfort. For example, I think it was might have been Brendan and John that were talking about it before. When you're not looking at property security, or someone doesn't have property security, how does a lender get comfort? And obviously by seeing the invoices that are coming through, and I suppose what parties are actually dealing with are a business. It's a very easy way for a lender to get more confidence about the business that they're lending to. So, Brendan, next steps. I'm a broker. I want to take something away from today's session. I want to look at what I can do to grow. What are the options, Brendan, for me?
Yeah, look, I think in terms of a broker looking to grow his business, one thing that I do see is quite a lot of clients that come to us direct where they have a broker, and it's quite interesting. And I often ask them if they do have a broker, and very often they do, but they've come direct. And to me, I guess it just sends a little bit of a message that some brokers set themselves up to be, well, somebody referred to it as sugar hit brokers. In other words, they're there when the business is buying something, be it a property or an asset, but they're not really ingrained or talking to their client about their cash flow and the events that are happening day to day in the business. And so, you know,
can we trademark that?
Sorry.
Can we trademark that? A sugar hit broker?
It came from someone in Queensland. They're like that.
Oh, there we go.
No, and look, I imagine for some brokers, those are great opportunities, obviously. But I think the brokers that we tend to do a lot of business with become sort of almost consultants into that business. And you know that actually when you get it, all the guys will know when they get a deal from that type of broker, it's almost certain to settle because he's sort of a key advocate inside the business. And I think all the debtor finance guys had recognised those guys that are seen in that way by their clients. So you know, I just think that's an opportunity. You know, you've got those relationships, and I guess it's just about deepening them, isn't it, at the end of the day?
Thanks, Brendan. That's it's an interesting point you made, because I would personally put my hand up and say that during COVID, post-COVID, things have been a little bit different in that regard. With that in mind, I'd be interested to hear from yourself, Mandy. What are the sort of areas that, if I wanted to get into this space, obviously you have a slightly different product. What are the sort of clients that, as a broker, I should be thinking about with regards to finding a deal for you? What are the sort of things that I need to be thinking of?
Yeah, I guess the first thing is, given that we started a loan limit of 400,000, a debtor book with a value of 500,000 plus. Ordinarily, they might be in a period of downturn. We'll still look at that. I think I echo everyone's thoughts on what they should look out for. But one of the things that I've seen that have come across my desk are really punishing early termination fees. So maybe to be wary of minimum periods, because there's a perception in the market by clients, even if it's codified otherwise, that you pay out your facility, it's working capital, you give some notice, and that's that. But it's not the case. Often we've seen like 50,000 or 120,000 in penalties just being charged for people that find that, you know, debtor finance can be a complex product and it's not a good fit for everyone. They might get stuck with all the administrative requirements. So just to be wary of, I think, of minimum periods as well.
John, I'm looking to target clients. I want to grow more in debtor finance and invoice finance. I've been listening to this Chris Slack guy crap on forever about how good invoice finance is, and how good debtor finance has been for him in the last 12 months. What do I do to look at more invoice and debtor finance opportunities, and how would you, what would you recommend for a broker that wants to get more into this space?
I mean, ultimately, the qualification for debtor finance is pretty simple, and that's business-to-business sales on credit terms, and that's it. So they've just got to look at their client list and look at businesses that are invoicing other businesses, and if they find them, to start the conversation about cash flow with them in that respect, and it's no harder than that. Yeah.
To steal Brendan's line before, for those people that don't want a sugar rush, do you think that many people are asking, will have that information in their database to be able to then look at that? Because I think that that's a really good point. And I know that from yourself, you have some pretty strong beliefs in terms of how different brokers look at cash flow and how people will look at different alternatives. I think maybe to that end, maybe that's part of the reason why a lot of people haven't looked to promote to an existing database. What's the sort of information that they need to look at? What's that basic bit? Okay, let's say I do a vehicle finance deal for someone, or let's say I'm doing something else. What are the additional things that I could ask for in terms of paperwork to give me that background that I can have a look at that sort of opportunity?
Yeah, look, given what we do, as you said before, we do single invoice and selective and so forth, and we're fairly strong in that area. It means that we have to have a fairly good understanding of the business we're funding, as well as their debtors. Generally, if you're doing whole of turnover, it's more about the debtors, nothing about your client. There is not one SME out there that doesn't like to talk about their business, and they're proud of it, and they've built it from nothing. And usually, if you get in a conversation with them, they're some of the most interesting conversations you have, and uplifting as well. And they'll always take you for a tour around the factory and so forth. So, if you've done someone's car, you should know why you're doing the car. Is it for their new sales rep? Is it because they've landed a new contract, a new cash, whatever? So again, it's as simple as having the conversation with them on what they do and who they service, and get an understanding of their business, which then leads not only to debtor finance, but could lead you into foreign exchange, trade finance. I mean, the whole lot opens up for you. Transactional, you can become, as Brendan was saying earlier, you can become their finance advocate. You become enmeshed in their business, and you're finding solutions for them in that respect. Do a good enough job, then you start getting backward referrals. Their accountant will start probably referring you as a great broker because you've serviced their clients so well. But it's just listening to people, having conversation.
I think there's some great points there that have been covered. I just want to refresh some of these. Whilst I'm refreshing these, if there's something else that you would have liked to see from today, please make sure you make a quick comment in the chat screen before we sort of wrap. But some of the things I wanted to sort of just cover off on in terms of the use of debtor and equipment finance together, there is quite a strong session on that tomorrow. That is the only session that isn't a conversation. So most of the sessions that we have as part of Broker Illuminati are conversations. It's about learning from each other and giving everyone the opportunity to go through things. Tomorrow's session is actually a presentation, and I'll actually be sharing my tips in terms of what I think brokers need to look out for if they want to grow this area. John, there were some great tips in there. Thank you. Mandy, you provided some great information, and everyone's looking forward to the calculator and further info. Amanda, thank you very much for your participation as part of today. I'm obviously looking forward to us also discussing debtor finance and equipment finance together tomorrow. And Brendan has his, Brendan is also joining us on a session straight after this one at 2:30, specific to trade. From today, I just wanted to thank everyone who has been part of the panel. thanks to John from Invoice Money do a really great job in terms of that single invoice, but they do look at outside the box scenarios. Amanda is a great BDM who I've had the pleasure of working with for some time, and looking at people that look at things differently in different client types is excellent. Brendan's been a great supporter of mine in early days. It's important to have different people you work with that have different levels of knowledge. And as Brendan said, he's been there for some time. He's probably forgotten what a few of us have learned over time. And Mandy, as part of Trade Plus have a very unique product. And all of these different lenders and BDMs have a place in our market. One of the things that I know from an equipment finance perspective, a lot of people want to quickly try and chuck something in a box and that's the solution. Well, it is a little bit more difficult, this space, but it is very rewarding. And to John's point that he's just made, once you have those in-depth conversations, you can really, it is more like having the thorn out of the elephant's paw. The conversations you can have with clients by having a cash flow conversation are so much more enriched. They feel that you have a greater control of business. John's 100% right. I've never seen a business that hasn't enjoyed talking about themselves, even the more tricky ones that we deal with. And to that extent, I can tell you, for those brokers on the call and aggregators and mentors, that every single one of the lenders that are part of our panel have really stepped up to the plate in a big way for some difficult clients. One last thing before I let you go, for each of you, in terms of if you had one thing that you'd like someone to take away from this webinar, just one, what would it be, John? Yeah, one, just one.
Have a conversation with your clients.
Yep, spot on. Mandy?
I really think that we could grow as a lender of first resort if we improve our transparency as lenders and reduce some of our costs and hidden fees. So have a look at that.
Amanda, from your point of view, if you could give someone one aspect that they could take away from today. Stats say that we forget everything after a few minutes anyway. So if we get one thing, Amanda, that someone can take away from today, what would that be?
That you don't need to be an expert in this product.
Yeah,
there's a good wealth of knowledge on this conversation alone that you should be leveraging.
Yeah, absolutely. And Brendan, the last word before a few of us join you in 15 minutes time.
Yeah, look, all I'd say, guys, is that receivables are a great asset to use to finance a business. Why should directors be putting their homes on the line to finance their business when they've got a perfectly good asset like receivables that'll grow and provide more cash as that business grows? So totally agree with John, but get involved with it and have a go, and I think you'll really enjoy the experience.
So the recap: utilise your lenders, tell people you do this, review your fees, and make sure you really leverage off the experience.